Hi everyone, I wanted to go over the amortization of cost over of investment value over cost and what that represents. And what I wanted to do is discuss a quick example I prepared here. And this is, for example, continuing to talk about what we'll do as a case study. But with this AOL, Verizon acquiring AOL, kind of looking into it, like first we look at the AOL balance sheet and we say, hey, this is the balance sheet. We got cash, equipment, patents, PP&E, trademark here, liabilities, short-term debt, long-term debt. I have a book value of 80 million, which is my assets less liabilities, right? And then I have to look at the fair value because look, as we're going to look at the case study, Verizon just a few weeks ago paid $4.4 billion for AOL. So some of these assets, yeah, their book value, like this patent, for example, I'm making these numbers up, but for example, this patent is 20 million on the balance sheet, and we'll look at the AOL balance sheet to look what's on there. But hey, in reality, the fair value is actually 200 million because that's what it would sell for today if somebody was gonna just to buy the patent. So the whole idea with amortization, it's like so hard to explain sometimes, but the idea is that when Verizon combines with AOL, AOL is going to continue to own the book value. All of this amortization, AOL is going to continue to perform that. But the thing is, nobody actually has access to understanding that there's another $180 million of value to this patent now that the fair value acquisition stepped up this basis to the patent by 180 million. So where is this amortization going to get captured? What we need to do is compute this base of 180 million and say, hey, this thing will be around for 10 years. And manually, which AOL is not going to do on its own, Verizon needs to do it at the end of the year, annually say $18 million is additional amortization, additional. And the journal entry for that will be on the consolidation piece, which will debit essentially income coming from investee and credit the investment account. And it's going to be $18 million debit, $18 million credit to account for that.